Welcome to Dinar Shift, where we explore the intricate developments shaping the conversation around international currencies. Today, we delve into a significant hypothetical event that continues to capture the attention of market observers: the appearance of the Iraqi dinar on major global financial data terminals. Such a development would represent a pivotal moment, shifting a currency often discussed in speculative forums into the direct line of sight of the world's most influential financial institutions. For years, the dinar has existed in a space largely separate from the real-time, high-frequency world of foreign exchange. Its potential entry onto platforms like Bloomberg or Reuters would signify a fundamental change in its status, moving it from a topic of theory to an asset with verifiable, live market data, a transition that would undoubtedly command the immediate attention of the global financial community. The implications of the Iraqi dinar, or IQD, being listed with live bid and ask prices on institutional grade terminals would be far-reaching. Imagine the scene in the financial capitals of the world, from London to New York to Tokyo. The sudden appearance of a new, recognized currency ticker would send ripples through trading floors. Algorithms that screen the world for opportunities would flag the new entrant, while analysts and strategists would be compelled to integrate it into their global economic models. This wouldn't be a minor update. It would be the introduction of a new variable into the complex equation of global capital flows. The initial reaction would likely be one of verification, as traders and institutions would seek to confirm the legitimacy of the data feed, its source, and the underlying infrastructure supporting it, recognizing that such a presence implies a deep and significant change in the currency's accessibility. For a currency to be recognized and quoted on these premier financial networks, it must have successfully navigated a labyrinth of technical and regulatory requirements. This is not a simple matter of requesting a listing. It involves a rigorous process of data authentication to ensure the pricing information is accurate and reliable. Furthermore, it necessitates the establishment of clearing and settlement agreements, which are the foundational pillars that allow for the actual exchange of currencies between international banks. Liquidity sourcing is another critical component, meaning that major financial players have committed to buying and selling the currency, thereby creating a functional market. This entire framework suggests that a significant degree of coordination and approval has occurred behind the scenes, involving central banking authorities and key players within the global financial architecture. This potential development would be viewed as the culmination of years of quiet, foundational work within Iraq's economy. Observers point to the nation's long-term efforts to reform its financial sector, improve the management of its vast oil revenues, and strengthen its foreign currency reserves. Such reforms are often slow and incremental, rarely making international headlines, but steadily building the institutional capacity required for greater integration into the global economy. The formal recognition of the dinar on international data systems would serve as an external validation of this progress. It would signal to the world that Iraq's financial governance has reached a level of maturity and transparency deemed sufficient by the gatekeepers of the international financial system, a milestone that has long been a central goal of the country's economic policy. The symbolic weight of such a moment cannot be overstated. It would represent a profound shift in perception, moving Iraq's narrative away from its post-conflict history and toward a future as a re-emerging economic participant. A nation's currency is intrinsically linked to its sovereignty and its standing on the world stage. Having the dinar quoted alongside established currencies like the dollar, euro, and yen would be a powerful statement of intent. It would announce Iraq's ambition to reclaim its financial identity and engage with the global economy, not just as an energy exporter, but as a country with a stabilizing and recognized monetary system. This change in perception could, in turn, attract new forms of international partnership and investment, as global capital is often guided by such signals of stability and formal recognition. For individuals who have held physical dinar notes for years, often amidst skepticism from mainstream financial circles, the appearance of a live ticker would feel like a moment of profound validation. For them, this has been a long-term belief in the potential for Iraq's economic recovery. Seeing the currency they hold represented by verifiable, Real-time market data on a professional terminal would transform their holdings from a static, tangible asset into something with a dynamic, measurable presence in the global marketplace. It would bridge the gap between their personal conviction and the official world of international finance. This event would mark the first time in the modern era that their holdings correspond to live, institutional-grade data, a development that would fundamentally alter the nature of the conversation surrounding the dinar. However, this moment would also demand a significant degree of caution and measured analysis. The appearance of a currency on a data feed is a critical first step, but it is not a final destination. It does not automatically equate to a specific revaluation or guarantee seamless convertibility for every holder. The path from data visibility to a fully liquid and stable market is fraught with complexity. A host of logistical challenges would still need to be addressed, including the establishment of efficient exchange mechanisms, the clarification of fee structures, and the implementation of robust anti-money laundering and compliance protocols. The initial phase of trading would likely be characterized by uncertainty as the market infrastructure is tested under real-world conditions. One of the most immediate and predictable consequences of a newly tradable currency is intense volatility. The early market for the Iraqi dinar would likely experience wide fluctuations in price as the first waves of institutional and speculative interest interact. Bid-ask spreads, the difference between the buying and selling price, would probably be very wide, reflecting the uncertainty and risk perceived by market makers. Liquidity, or the ease with which the currency can be bought and sold without affecting its price, could be thin and unpredictable, appearing and disappearing rapidly. This environment is the financial equivalent of a frontier territory where both significant opportunity and substantial risk coexist. Navigating such a market would require a high level of sophistication and discipline. For institutional traders, the approach would be methodical and risk-averse. Major banks and hedge funds would not rush in blindly. Instead, they would deploy sophisticated risk management models and initially commit only small amounts of capital to test the market's depth and efficiency. They would analyze order flow, the reliability of settlement, and the behavior of other institutional participants. Their primary goal would be to understand the new market's dynamics before making any significant commitments. This cautious, analytical approach stands in stark contrast to the emotional reactions that can often drive retail speculation. The institutional world would be watching, learning, and adapting, but their participation would be governed by strict protocols designed to mitigate the inherent risks of a nascent market. This hypothetical development would also have profound geopolitical implications that extend beyond the realm of finance. A nation's currency is a powerful tool of economic statecraft, symbolizing sovereignty, credibility, and strategic alignment. By bringing the dinar onto the global stage, Iraq would be making a clear statement about its intention to pursue greater financial independence. This move could be interpreted as a step toward diversifying its economic relationships and reducing its long-standing reliance on the US dollar for international trade, particularly in its critical oil sector. Such a shift, even if gradual, would force global powers and regional neighbors to reassess Iraq's economic profile and its evolving role within the Middle East. This act of placing the dinar on global screens could also be seen as a strategic alignment with international financial standards. To achieve this, Iraq would need to demonstrate a commitment to transparency and compliance with global norms related to banking and finance. This signals a readiness to participate in the international system according to established rules, which can enhance diplomatic and economic partnerships. However, the credibility of this message would be continuously tested. The global community would watch closely to see if Iraq can maintain a stable policy environment, ensure consistent liquidity for the dinar, and provide the transparency that international investors demand. The initial appearance is a powerful first move, but long-term success depends on sustained performance. Looking at the broader global currency landscape, the emergence of the Iraqi dinar could challenge the long-standing monetary hierarchy. For decades, the financial world has been dominated by a handful of major currencies, with the US dollar serving as the primary reserve asset. Most other currencies have played a peripheral role, particularly in international settlement and investment. The successful revival of a once marginalized currency like the dinar could serve as a powerful proof of concept for other nations. It raises a fundamental question. Can a country reclaim its monetary sovereignty and achieve international legitimacy through disciplined reform and modern financial integration? If the dinar were to demonstrate resilience and attract sustainable liquidity, it might inspire other emerging economies to pursue similar paths. Nations that have long been dependent on foreign currencies for trade and investment could see a viable pathway toward elevating their own currencies on the global stage. This could contribute to a slow but significant shift toward a more multipolar and diversified international monetary system. Such a transformation would not happen overnight, but the re-entry of a currency like the dinar into the global conversation would represent a notable crack in the existing paradigm, suggesting that the balance of financial influence is not immutable and can evolve over time. Understanding the technical mechanics behind such an event is crucial for appreciating its complexity. When an order is placed for a newly tradable currency, it enters a vast and intricate network of systems. The order must be routed through exchanges or liquidity providers that are equipped to handle it. Conversion paths must be established to link the dinar to major currencies like the dollar or the euro. In the initial stages, these processes can be inefficient. Spreads may differ significantly from one platform to another, and some brokers may not yet have the capability to support seamless, two-way trading. This is the natural friction of a market in its infancy, as the infrastructure learns to adapt to live trading volumes. The true test of the market's maturity will be the transparency and reliability of these behind-the-scenes processes. Traders and investors will need to understand the execution mechanics, the counterparty risks, and the settlement protocols before they can commit capital with confidence. The financial institutions that can master this complexity, offering reliable execution, tight spreads, and credible clearing services, will play a pivotal role in shaping the global perception of the dinar. Beneath the surface excitement of a new ticker symbol lies a complex web of technology and institutional relationships, all of which are being recalibrated in real time to accommodate a currency that many had long written off. Amid the inevitable media coverage and online discussion that would accompany such a development, maintaining a grounded and analytical perspective would be paramount. The narrative would likely be flooded with a wide range of opinions, from celebratory claims to sensationalist predictions. History shows that every major market event is accompanied by a storm of noise, making it difficult to distinguish credible information from speculation. Exaggerated claims and conspiratorial theories would likely proliferate, creating a confusing environment for those seeking to understand the situation. The wise approach would be to filter out this noise and focus on verifiable data and fundamental indicators. The most reliable insights will come not from rumors, but from objective metrics. Analysts would be closely watching trading volumes to gauge the level of real participation. They would monitor the evolution of spreads as a measure of market efficiency and risk. Official announcements from regulatory bodies and the Central Bank of Iraq would provide crucial policy context. The behavior of large institutional participants would offer clues about the market's perceived stability. These data points, rather than speculative commentary, will ultimately reveal whether the dinar's rise is a sustainable trend or a short-lived phenomenon. Discipline and discernment will be the most valuable tools for navigating this new environment. From a long-term strategic perspective, a tradable dinar could unlock new pathways for Iraq's economic development. Imagine a future where Iraq can conduct its international trade for both its oil exports and its imports directly in its own currency. This would reduce transaction costs and mitigate the risks associated with fluctuations in the US dollar. Furthermore, it would enable the Iraqi government and corporations to issue debt denominated in dinars, creating a domestic bond market that could attract both local and international investors. Such developments would fundamentally shift the country's financial architecture, granting it a much greater degree of control over its monetary and fiscal destiny. However, this vision of financial sovereignty is not an automatic outcome of having the currency listed on global terminals. It is a long-term goal that requires unwavering commitment to sound policy and good governance. The initial excitement of international recognition must be followed by the difficult and patient work of building credibility. Global markets have long memories. They may celebrate today's news, but they will demand consistent proof of stability and predictability for years to come. It is not enough for the dinar to simply appear on the screen. It must perform there, demonstrating that it is a reliable and competitive currency backed by a resilient and transparent economy. Even with the surge of optimism, a healthy dose of skepticism is warranted. Experienced economists and traders understand that visibility alone does not guarantee durability. A series of critical questions would echo across trading floors. Will the initial liquidity be sustained once the novelty wears off? Will the market be deep enough to handle large institutional flows without causing major price dislocations? Will the process of converting the dinar into more established currencies remain seamless, or will friction and bottlenecks emerge as trading volume increases? These are not abstract questions. They are practical tests that will determine the currency's long-term viability. Perhaps the ultimate indicator of long-term acceptance would be whether other central banks begin to hold the Iraqi dinar as part of their official foreign reserves. Such a move is the highest form of endorsement in the international monetary system, signaling deep and lasting trust in a currency's stability and value. The path to achieving this status will be long and will depend on Iraq's ability to maintain credible monetary management and careful integration into regional and global clearing systems. The early signs of confidence are fragile and could be easily undone by sudden policy reversals or inconsistent regulations, highlighting the long road that lies ahead. For anyone observing these developments, whether a long-term holder or a newly interested party, the most prudent course of action would be to proceed with caution and a commitment to education. Emotional decisions driven by market excitement are rarely successful. The first step should be to understand the practicalities. How would banks, brokers, and exchanges in one's own jurisdiction handle dinar conversions and settlements? The rules, fees, and processing times can vary significantly, and a lack of knowledge can lead to costly mistakes. It would be essential to gather information and develop a clear understanding of the new financial ecosystem as it takes shape. Given the expected volatility, a disciplined and staged approach to any market participation would be critical. Rather than making large all or nothing moves, experienced traders often scale into and out of positions, managing their risk through diversification and careful timing. Seeking advice from qualified financial professionals, particularly those with expertise in foreign exchange and emerging markets, would also be a wise step. Ultimately, it is important to brace for a period of turbulence. This potential event is historic, but the system is untested. It should be viewed not as a guaranteed outcome, but as the birth of a long and uncertain financial journey. In conclusion, the awakening of the Iraqi dinar on the global financial stage would mark a definitive shift from theory to data, from rumor to reality. The currency would no longer be a forgotten relic but a living, breathing component of the international financial conversation. Traders would be watching, analysts would be modeling, and institutions would be cautiously probing this new frontier. Every market participant, from the largest hedge fund to the individual holder, would face a new set of choices, each carrying its own unique risks and potential consequences. The global financial community's posture would shift from dismissal to watchful observation, a significant advancement in its own right. This new reality, however, guarantees nothing. The landscape would be characterized by wild volatility, uneven liquidity, and rapidly shifting sentiment. What was once a topic of speculative belief would become a quantifiable and analyzable asset, subject to the unforgiving scrutiny of global markets. For Iraq, the challenge would be monumental: to prove through consistent and stable policy that this awakening is not a fleeting dream, but the dawn of a durable new economic era. The journey ahead would be long and would test the patience and resolve of all involved, as the world watches to see if the dinar can solidify its newfound place on the global stage.